Tuesday, August 26th, and I'm going to fly through the show. A lot of good things happening on the show. I'm going to tell you right now. I've got a new YOLO investment that I'm going to probably go into. I'm trying to find an entry. I'll tell you what that one is. We had an alpha pick sale yesterday. I'm going to go through the entire strategy of what I did and why. You may have a different thought process, but I'll give you mine. China is breaking out on their tech sector. America is still an AI market. We'll go over a stock that's up 70% in pre-market. And then one that I was looking at yesterday, which is paying a yield of 60% YMAX. So then we'll look at a fire tip, because a fire tip yesterday, financial independence, retire early. That's what everybody is usually looking for. That's investing in the market. So let's get started with, here's to everyone who thinks I have no idea what I'm talking about in the market, because you're a genius that bought Palantir and Hood. I got a couple of messages yesterday. I don't know what I'm talking about. Well, in a bull market, even a moron can, here's the thing. I've had more experience than your own daddy. Okay? Again, a bull market will make everyone think like they're great at investing. I am not great at investing at times. I make mistakes. Everybody makes mistakes. The reality is the net behind you is this bull market. Was everyone thinking they were great in investing in April? No, a bull market will make you think that. So be careful. Understand what you have. And I wrote yesterday in the newsletter, make sure you have, and I pulled out this quote. You don't go to war without weapons. You need weapons in war. And it's the truth. What are my weapons? We'll go over to Linktree. Trendspider is having a sale. This is a great sale. Now, I haven't even looked at their marketing messages. They sent me a marketing message. I haven't looked at it. I will give you the way I think about this, okay? Trendspider is my charting program. It is my bread and butter. When we get into a market like 2022, Trendspider helped me. These charts, we talked about it yesterday. It is all about the price. The price is all that matters. That's all you care about. So take every indicator off this screen and just use a chart. If you can't look at this chart and understand where it's going with just these candles, I urge you, start looking at charts on a daily basis for at least a year. And then you're going to get better at looking at these things, okay? Where's your support? From here, I would say the support is at 538. That would be a big move down. That would be almost 10%. Would I be shocked if it moved down there? No. And that's just from looking at this chart. I don't have a line there. You want to know why? Because in February, before that, that's right where this was, 540. And then you look at this, and it gave you a little bit of resistance right there back in June. So that's where I'm looking at. And if you don't see that, start looking at charts. And you don't need Trendspider for something like that. But you do need Trendspider to set alerts. You do need Trendspider to backtest your strategies. You do need Trendspider to create custom indicators, to create custom strategies, and most importantly, to scan the market to see what is in your A+ setup. Okay, if your A+ setup is a MACD cross up with the RSI under 30, with the price trading under the 200-day, you can do that in most programs, but you can't backtest it and you can't set alerts. So that's why I had this. Now, the advanced tier, if you're saying, I don't know what you're talking about, Gary, the advanced tier is probably for you. Now, here's the way to think about this. It's $107 a month. That's a lot of money. But it comes with 52 training sessions per year. You get a one-on-one Zoom session with a product expert. So if you're one of these people, and then a month from now, if we're down 30% because Trump is firing Fed governors, again, you've got to know what the price is doing. So that's why I say that. Okay? Because FYI, Trump is firing Fed governors. He's doing it. I don't blame him. She deserves to be fired. If what is true, she deserves to be fired. The fact is, she gave an opening to Trump to fire her. And you're not above the law when you're a Fed governor. In fact, you're in charge of our monetary policy. And you're going and getting a mortgage on primary mortgage on 2 homes. That's just bad. And you deserved it. Now, Powell couldn't fire her, but Trump can. That's what the law says. And if it goes to court, it'll go to court. But the markets are worried about the Fed independence, whether he has the right to or not. The markets are worried about the Fed independence. If they're not independent, that's a problem for the market. Remember when Trump was threatening to fire Powell? That's the issue. It's not whether he has the right to or not. It's the issue of the Fed independence. So understand there will be volatility around this. Right now, market doesn't care much. It came out, and let's see, QQQ is down 0.21%. It doesn't care. It will care if she actually gets fired and he's able to put somebody in there. Then you've got another catalyst down, which is 200% tariffs on China. Now, I will give you a play on this one because he's using Boeing as the bait. So this is the carrot being waved, okay? You can get Boeing stuff if we can get rare earth. And Boeing, by the way, is still not back up to its highs at 400, 341. You're just on a weekly, you just are getting potentially a golden cross. So if you see Boeing dip because Trump put some export tariffs on it or does some limitation where they can't sell stuff, that's your opportunity to get Boeing. It is a good company. It is in restructuring right now. The quant has it as a hold. Wall Street thinks it's still worth a $247 price. That's a 10% upside. And it's not bad. The valuation, again, these things are being fixed. So if they go cash flow positive, expect this to be a $350 stock. It's a long-term play. I did pull it out of the core portfolio because it just hasn't performed well. That weekly, and by the way, just to give you another thing, gaps get filled. And look at that gap between 234 and 240. If you had traded this one along this trend line, and that trend line right there it hit it at 149, it hit it 159. Boy, you're doing pretty well on that one. Just didn't perform well. Now, let me tell you about Alpha Picks, okay? Alpha Picks is a data-driven portfolio, 2 stocks. We're going to get one on the 1st. You get one on the 15th as well. They tell you when to sell. We had a sell yesterday, okay? Now, I want to tell you about this stock. It was added on 5/1/2024. It's just over a year and a half ago, maybe. It added 30% gain in just over a year. So it outpaced the S&P. The reality is when you go into this, you only buy 1% of your total portfolio, okay? So if you had $1,000, $50,000 into the portfolio, you'd only buy $1,000 into this pick back in May of last year. That means today you have $1,300. It's not bad. It's just, it is what it is. $300 is not a huge gain on $1,000 for someone like me. But I do have significantly more money than $50,000. I started at $50,000 last August, but I've slowly added money. I did not add money to this pick. You want to know why they sold it? Because it's been a hold in the quant for more than 180 days. That's one of the rules. So the rules it's a rules-based portfolio. And you can see the performance up 210% versus 70%. Okay? That's why they sold it. It's been a hold. It has been underperforming some of the big winners. And the portfolio, because it's a hold for 180 days, they say we're going to get rid of it. So let me go over why I sold it. Okay? Sometimes I will hold on to these. The stock is GM. Now, it's a hold. It's a hold in the quant, and it's been a hold based on the growth. You can see the growth is next to nothing. 5% revenue growth year over year. It's an American car company. Okay? When I go and look at the Wall Street price target, it's 57. You're trading at 58. So again, where's the upside? Where's the upside for it? The risk reward. Let's go and look at the chart. I've identified the chart, and this was prior because I held it. I said, you know what? I want to identify where the top and the bottom are. And you can see the top I identified as 64. So 58 to 64 with a $1,300 position, the risk reward is not great for me. Because again, it's a very small position. Why would I hold on to it when the quant has proven to be better in the history of actual portfolio management than myself? The quant, again, you look at this portfolio gain. It's a rules-based portfolio, so I followed the rules. So now the question for some people might be, well, okay, so I sold $1,300. What do I do with that $1,300? Well, the portfolio says, the portfolio management is that you spread it out over the rest of the picks, the current portfolio. So you take the $1,300 and you spread it out among that. I've been testing a different strategy, okay? I took that $1,300 and I spread it out over the strong buys in the portfolio. I didn't want the entire portfolio. I took the strong buys from the quant in the portfolio. So I'm going to differ from this return. That's the fact. I'm going to have a different return. Is it better? Is it worse? I need to manage those positions. And so that's what I do. I put alerts into Trendspider for those positions that I own. I have my own brokerage watch list and I use Alpha Picks in there. I have an Alpha Picks watch list. And so that's what I do. It's about creating this portfolio that hopefully outperforms the S&P because so far it has. Has mine over a year? Absolutely. I've been trading in this portfolio. I use these picks as trades. I bring them up here sometimes. Sometimes I don't even tell you that they're an alpha pick. But again, this is a portfolio that is nice and simple. So my portfolio is set up with several different things. I've got my ETFs. I've got my Mag 7 positions that I've traded in that are buy and hold long time. I've got trades that are short term. And I've got the Alpha Picks portfolio. I can manage that overall portfolio with very little effort because I've got the tools. Again, you don't go to war without your weapons. The tools are my weapons. And that's what I use. A subscriber emailed me yesterday, Ben, and said, hey, thanks for Sphere. It was last week on 8/19, okay, the 19th. That is just 7 days ago. I said, hey, Chris Camillo, anyone playing Sphere off the Taylor Swift residency chatter? It was 7 days ago. That was last Thursday. Let's look at it. It's a hold in the quant. I said, I don't know if I'm going to take this. But on August 19th, this stock was trading at $40. $40. That's a 10% move. Congrats to those that took the trade because it was in the newsletter and I mentioned it. I did not take the trade. Ben did. Congratulations. Again, put it into something and you can see if we go in Sphere here, I even had mentioned that the 4-hour algorithm had a buy here at 39. 39 on the 15th. I mentioned it and I said it really hasn't moved. Boom. All of a sudden you get it. Where do I think it's going to? Probably 47. Just from looking at the chart, I think it might go to 47. Am I willing to do this risk reward? No, it's not my thing. Not my thing. So again, you can use the newsletter like Ben did. Take the risk, you get the reward. It's not always going to work out. Chris did. You want to know why? He's a huge Taylor Swift fan. Or I'm sorry, Ben did, who listens. He's a huge Taylor Swift, and he told me, huge Taylor Swift fan. And if she gets a residency, I'm going. I might as well buy the stock. Not a bad one. And you want to know what's breaking out? China. CQQQ. This is an ETF. I mean, if we just go over and look at CQQQ, you're seeing me use Seeking Alpha right now, CQQQ, and let's just go down and do it. This is the Invesco China Technology ETF. It is China's QQQ. And you can see the holdings. The holdings, Tencent, PDD. I don't know half of these companies, but it's 161 China companies. And it's breaking out. It's a buy in the quant. A+ momentum. Want to know why? 1 month, it's up 10%. 6 months, 9%. 1 year, 61%. Fantastic. Do you want to get into this one? CQQQ. Well, you can trade these on a 4-hour algorithm. It beats buy and hold. 58%. You can see it down here. 58% versus 37%. Had you in at 43 back here June 25th. 43. Again, have the tools to go to war. That's a 20% gain. Again, have the tools, go to war. That's it. And I will tell you, we are in a bull market. This is America, and this is a bull AI market. AI bull market still has another 2 to 4 years left. This is what Intelligent Alpha says. Doug Clinton, CEO of Intelligent Alpha, he said it on CNBC yesterday. This is still 2 to 4 years left. Again, you want to be in the market when we're in a bull market. It's not something you want to be out of. It's not something you want to be scared of. Will we have pullbacks? Yes. Trump is firing Fed governors. Trump is in a trade war with China. You're going to have pullbacks. But this particular QQQ on a weekly, I've outlined this, anchored down here, March 2020, which was the bottom of COVID. And you can see, if you just draw a line straight up, the more candles you touch, the better validity you have on that trend line. Now, if we pull back again, 540, remember where 540 was? If we look at the 4-hour algorithm, and I said at the beginning, boy, look, that's around 540 right there in February. Guess where this trend line, if we pulled back today, would be? 540. And again, this is a weekly. The indicators do seem stretched on the weekly chart. I wrote this in a newsletter. So don't be shocked if we see a pullback, but it is a still buy the dip market. If we still have 2 to 4 years left in this market where it's going up. I listened to that My First Millions podcast yesterday with Howard Marks. It is a legendary podcast. You should absolutely go and listen to it. He goes over, hey, 23 times forward on the S&P, you don't want to invest. And he's not investing. But he goes over risk reward. And he takes Sean and Sam and identifies, hey, you may have the risk. You may have the tolerance, but Sam doesn't. So again, that's what he's doing. So let's go over one of mine that I think I want to get into. Open Door. Risk reward. This is a stock that makes no sense to me whatsoever. But you can see on this 5-year chart, it goes all the way up to 25. But again, the person who started this whole Open Door thing is the guy who called Carvana. We can look at Carvana. Carvana, over 5 years, 78%. 1 year, 129%. But if you go and look at this one, and you were to say, okay, when he found this one, Eric Jackson, I think his name is, he found it down here at $4. $4. Okay? 2022, that was, he said, hey, used cars, they're going up. This would be a 7,357% gain. He says Open Door is a bigger opportunity. You want to know why? Because Carvana was investing in depreciating assets, cars. Open Door's investing in real estate, which is traditionally an appreciating asset. And you saw it spike with the surge after Powell signaled rate changes ahead. Now, is that a great thing? Probably not. Any reaction is an overreaction. You can see it was down 10% yesterday. It's down 2% in pre-market. I am trying to find an entry. But I do think if I had just used the 4-hour algorithm, I'd be up 82% in 13 days so far. 82%. And I'd probably be getting out because of this double top on the MACD. And I'd be taking profits. So it's a short-term trade. It is not something that I'm going to buy and hold. If I make a lot of money in a short-term trade, I may take some of those profits and put it back into this and just play with house money. But this one is able, and it's been shown it can move in a very dramatic fashion. So I might do a YOLO trade. I am still investigating this. I will let members of the newsletter, I will put it in there if I go into it. And retail is pushing stocks. GoPro yesterday, up on no news, up 36%. This is what it feels like when you're in a bull market and you reach a peak that needs a pullback. And that's where we're at. So again, Open Door is short-term. GoPro, short-term. It's down 2% in pre-market. This is only $1.61. This is not a stock that you want to hold. Okay, Wall Street thinks it's worth 80 cents. That's a 50% downside. There's only one analyst to cover this. But the momentum, you are in 6 months, you're up 111%. In 3 months, you're up 186%. Want to know why? 11% short interest. And so when you get some type of pump in this one, you get a crazy amount of short coverings and they have to sell. And that's it. But I'd rather have Open than GoPro. Why? Because Open is investing in real estate. GoPro, $300 cameras. You want one that's popping today? SATs. AT&T strikes $23 billion deal to buy Spectrum from EchoStar. SATs. SATS. This is interesting to me because I literally was looking at this one when I saw it was up that much. I said, ooh, is this one a possibility that I could trade? Let me go and find a trade on this one. Well, I took a look at this 4-hour and it got you in at 29, but you are trading today at 53. 53. It's up 78%. 78%. 10% short interest. AT&T buys Spectrum, you get a short squeeze. Now, where's it trading at? When I was looking at it, it was at 49, 50 bucks. It's at 53 right now. Had I bought it, I'd be up a nice 10% in like 10 minutes. Okay? But here's the thing. When I looked at the history of this chart and I just pulled this back and I said, okay, this goes all the way back to 2011. Where's a likely place that it's going to top out at? And 50 was it. Want to know why? Because that's a previous all-time high. Is it going to hit there and pull back? Maybe. Does it go further? Maybe. But in my mind, if I was buying at 50, at 50, I said it really doesn't have that much more upside. So I didn't take the trade. But if we look at it from a short term, we just go to a 5-minute chart and we look at the short term. Let's see, right here, you have confirmation. You still have confirmation. And you can see right above that 50, you can see it was trading right there. That's an 8 o'clock candle, by the way. Ignore that it broke the support. I think that's the support. So if I were trading this one and I were buying this at $52 right now because I said, you know what? I want to buy this. It's going to be crazy. It's a short squeeze. I think it could run a little bit. Then I would be putting a stop at 50 bucks. 52.80. I'm literally just risking that amount for a big short squeeze upside. That's risk reward. You have confirmation. Would I have rather gotten in under this 50? Absolutely, I would have rather gotten in under this 50. But that's all that is. It's risk reward. One of the things I was looking at yesterday was YMAX, and I found this article. YMAX is an ETF that its yield is 60%. Before I go into that article, I'm just going to pull up YMAX and I'm going to pull it yield 65%. And you look at the dividends, okay? The dividends, the dividend history, they pay out on a weekly basis. So every week you get a dividend. Is it 60%? No. It's 60% divided by 52. So it's like 1% almost a week. So let's see how it's charting against the S&P. We will do select metrics because I want the total return. That includes dividends. And we'll update this chart. Looks a lot different because YMAX gives you 23% over 1 year versus the S&P at 14%. It is high risk. Understand, it's high risk, but it's paying you over that 1 year. Year to date, it's kind of meeting. So while you're getting the dividends, you're actually paying income tax on those dividends if it's not in a retirement account. If it's in a retirement account, you don't pay the tax on dividends. Not tax advice because I'm not 100% sure of that. But again, I'd rather be in the S&P buy and hold than getting those dividends. And that's what I was looking at yesterday. Now, this is what's interesting. Both offer high yield weekly income. Both are very high risk investments. So I was reading this. You want to know what it's about? Go and get Seeking Alpha. Again, they have the analysts to do all of this for you. The quant says YMAG is a sell. Again, it's a sell. This is the Mag 7 holdings with income coming out of it every week. So I will tell you, I got an email from somebody on Facebook, or there was a post. There's an explosion of ETFs from income, leveraged, and specialty. There is a likelihood, okay? There is a likelihood that over the next few years, if you're a person who enjoys cooking pasta, watching midget porn, you'll get a targeted ETF, okay? If you're a person who claps and woohoos when the plane lands, you're going to have a targeted ETF for you. If you're a person who kisses their cousin, you're going to have a targeted ETF for you. Again, ETFs are going to be a crazy, crazy explosion. They're going to be focused. So you have to know what you're investing in. And if it says this is for people who cook tamales and watch midget porn, that's going to be your go-to if you're that type of person. Now, I want to give you a tip, a fire tip: financial independence, retire early. Okay. This is the personal finance. This is a guy who was a doctor. I think he retired at 39 years old, something like that. And he's been retired for 8 years. 8 years ago, many were saying retiring in $3 million in California is not going to get you very far. It's the taxes in California. It's like 10% state taxes. Add that to 30%, 30% income, federal income taxes. And then you add in your property taxes, things like that. He's getting taxed out the wazoo. So $3 million didn't seem like it would last very long. So his plan: invest the $3 million in index funds, spend less than 4%. If you don't know about the 4% rule, it's the 4% rule. You basically can withdraw 4% a year in safety over time. And it's been shown it can last you a very, very long time. Over the last 8 years, he's bought 2 houses, sold 1. He traveled the world. He got married, had a kid, did $3 million last through all of that. Yes, it's now close to $6 million, $5.5 million. I have a friend who's living on the 4% rule. The 4% rule works. If you're interested in financial independence and retire early, the 4% rule is something you want to look at. Now, do I live on the 4% rule? No. I've got enough money that I don't really even budget stuff, but I also don't spend a lot. So I don't even spend 4% of my total income based on trading, dividends, and this podcast. So I just don't do it. But it's a great post about, hey, if you follow rules and you follow a process, you can live the life you want to live. Again, if you're going to war, you need your weapons. He had his weapons, his plan. and it's a back-tested strategy. Now let's talk about earnings, because you had Okta. I don't even know if Okta, let's see if Okta came in. I'm recording this a little early at 8:30. Okta is up 0.48%. Have they released earnings yet? Let's see. Okta up 0.21, gets rating upgrade at Concord. Q earnings to Infocus, Truist. I haven't seen, so the earnings haven't come out yet. It said it was pre-market, but again, maybe it's post-market. Who knows? MongoDB today. Abercrombie and Finch. You're welcome. William Sonoma. I just get a crazy listener who corrects me all the time. NVIDIA, CrowdStrike, Snowflake. Here's the thing about NVIDIA. This is what's going to move the markets. Now, NVIDIA's options market, I heard it yesterday and on Spaces somewhere. The options market is pricing in a 6% move. What's your bet? Up or down? It's pricing in a 6% move. Usually the options market is very accurate in this sense. So again, 6% move. Where, based on these candlesticks, a 6% move, where would you guess? Make your determination. I've got mine. I know, I have a feeling where this is going to go. I'm not going to tell you what it is, but I have a feeling where it's going to go. And I positioned myself for that feeling. You don't know for sure. You don't know, for me right now, 4-hour algorithm has you out. It probably will get you in on the next candle, which is today at 9:30. Where is it going? Well, short term, you can see during this April downturn, you could have had this if you broke that trend line. When you broke that trend line here at 120, it was time to buy. I was buying down here at 106. I was buying down there at 199. So again, it's a risk reward scenario. I get the reward because I took the risk. And if you're saying, well, I should have put in, millions of dollars into this, the reality is that would be too much risk. Even with the reward, that would have been too much risk. Open door. Say it goes up to 6 or from here, 450 to 6. Is the risk worth putting in a couple $1 million into this? For me, no. It's going to be a YOLO play and probably be 5 figures. But the risk of going back down 50% is worth the reward that potentially could come. There are a lot of investments that I do and trades that I do where you have to balance risk reward and you have to know the upside and the downside. That's why you want these tools. And that's why you want Trendspider to see the charts. That's why you want Premium and Alpha Picks. You've seen me use Premium throughout this entire show. If you just want Premium and you say Alpha Picks is not my thing, I don't want the portfolio. That was me at first. And that's what's great is you can get a free 7-day trial and you get $30 off the annual subscription. That's what's fantastic about it. Again, free 7-day trial. What can you do? You can go and find out the top 2025 stocks, which are still soaring. You can find out the top second half 2025 stocks, which are still soaring, which are outpacing the market. But I will tell you, the bundle here, where you get the Seeking Alpha Premium and Alpha Picks, and you save $160, it is a better deal. And many people in very short time make that money back. That's the goal, is to make the subscription money back with some of your YOLO trades. You can go in here, you can go and find the top stocks if you want. MU, RIGL, BTG, HST. I've brought up a lot of these in the past. They're top stocks. They are top stocks by quant rating. You can sort them by Wall Street rating. What's the top Wall Street rated stock? It's INFU. Want to know why? Because there's probably one Wall Street analyst that cover this. There's 4. INFU. This is a stock that, let's see, short interest. No, it's a $201 million market cap. Even the quant has it as a strong buy at 4.82. You can analyze it with AI. It's 3 out of 48 in healthcare services. And if you go and look, when did this one have it as a strong buy? They had it as a strong buy at 883. Where are you right now? 987. So again, understand you can make this money back rather quickly if you are using the tools. You don't go to war without your weapons. The weapons for me, Trendspider, Seeking Alpha Bundle. If you have any questions, hit me up. I'm on Linktree. I will talk to you tomorrow. Say bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.